Hello and welcome to Three Charts in One with me, Richard Perry, market analyst for Infonox on Wednesday, the 12th of October. Now, I've got three charts for you today. Maybe a little sign of a turnaround. I'm not sure yet, but we'll have a look at the charts and see what they throw up. But we're looking at euro dollar today, which has started to form a bit of a low near term. We're also looking at a bit of support coming in on gold, and finally looking at the SP 500 futures, which have not broken down. So that's also starting to consolidate a little bit. So let's have a look straight away at euro dollar, where we've seen this sharp move to the downside. But yesterday, when US bond markets returned from Columbus Day public holiday on Tuesday, they didn't really drive markets into the continued move lower. That dollar strengthening that we saw in the wake of non-farm payrolls just sort of dried up a little bit on Tuesday, and it's sort of holding ground again today. So let's look on the 4-hour chart as to whether this is starting to see a bit of a turnaround. Well, we've got the support that's starting with the RSI hitting 30 and just holding up, but yet nothing to really suggest that there is a recovery on a near-term basis. We're still pulling these lower highs and lower lows, but that support is in place at 96.70, and if the market can get back above 97.75, which was yesterday's high before the pullback, then we could start to see this little bit of a near-term turnaround. That would obviously therefore be around about 100 pips worth of potential recovery on a little mini base pattern, and then you start to come back into this old resistance, which is sort of 97.60 area, 98 sort of up towards 98.60 area up towards 99.50 area, and that is the old overhead supply. So this is the big level on a medium term basis that a recovery would need to get through. Obviously, we've still got this big downtrend in play, and the failure at parity was a concern as well. But the market has just started to find a bit of support now. Can it hold up? Well, obviously that support at 96.70 is important. If that gets broken to the downside, there is further downside potential on that daily RSI. But just for now, this morning and from yesterday afternoon, we are starting to see a little bit of support forming, but it's just a consolidation for now. Onto the gold chart again, an interesting one where we saw the selling pressure coming back in. We've got this overhead supply of 1680 to 1690 area. That was key sort of pivot area, which got broken initially and then got broken back to the downside, but yesterday came back in as resistance. See that on the 4-hour chart, where we've got this resistance overhead 1680 to 1690, but again the market is holding up around that 1661 level, with the RSI on the 4-hour hitting that 30 and just sort of unwinding a bit. But at the moment it's just a consolidation and just not falling away. So in light of what we've seen in recent days, that's a start at least, but can it continue to recover? Well, it needs to get, as I said, above that pivot area. 1684 was the reaction high yesterday before falling away. Sort of 1680 to 1690 is key resistance on that medium term basis. That is a big level overhead, and we need to see that continuing to sort of move higher through that to engage some sort of recovery again. But just for now, it's just holding ground. On this 4-hour chart again, I'll sort of the 1660 level, 1660 is that basis of support. If that gets broken again, that really does open the way, I think, towards the lows, which came in at 1615. So it really is I think an important moment. I think that if this consolidation does get broken to the downside, having been a consolidation, I think it would suggest that we are starting to really come back towards a test of the lows again, but just consolidation for now once more. And finally, on S&P futures, was sharp selling pressure in recent sessions, the last 4 sessions in a row, significant downside, but held up above that 35.71 reaction low from the early October. And it held that support yesterday and hasn't broken it. Again, I'll go onto the 4-hour chart to see whether we're starting to see a recovery. Well, again, just consolidation. That 30 level on the RSI on the 4-hour chart, again, a point at which the support came in above that 35.71 level. But we do still have this downtrend. We've got the overhead supply resistance area, 36.50 area up towards 36.67. again, that is resistance overhead that on a near-term basis needs to be broken to engage a recovery. But even, as I said, even on this sort of 4-hour chart, we're still in a downtrend phase. And you're going back on the daily chart, we see consistent downtrends all over the place on this chart. We've got the big primary downtrend back from the start of the year. We've got the secondary downtrend, which also comes in as a sharper move since early September. And then obviously, again, the sharpest one of all. But the sharpest one of all is likely to be broken at some stage, possibly just by even a consolidation. But you'd still be looking at selling into strength, I think, at this chart, seeing as the number of lower highs in place and the negative configuration on the daily RSI. So any sort of unwinding moves I'm looking at towards back, maybe towards the 50 area, I would see as a chance to sell for further testing of this 35.71 key reaction low. So I wish you good luck in your trading today, and I will speak to you soon. Thank you very much.